Well, let's get across the market open now. Joining us is Jessica Amir from Moomoo. Jess, great to catch up with you on this Tuesday. Big day ahead locally, of course, with the RBA meeting. But stateside, well, they were closed for a holiday.
Yeah, absolutely. Not much leads to go by. The US markets, of course, closed for another public holiday. Good on them. But we are taking up plenty of leads from gold prices moving higher. We're seeing defense stocks in Europe also push up. We also have to remember, last but definitely not least, we've got focus on Chinese tech stocks because Xi Jinping, the president of China, has met with his tech leaders overnight. And it's interesting to see that he's done that just a month after Donald Trump met with the tech titans in his inauguration. So there are plenty of leads to follow. Of course, the main focus today is the RBA. And of course, will they cut or won't they cut? That could leave the market ready for a big shake-up. So we have seen the Aussie share market outperform the US so far this year. The Aussie market's up 5%, while US stocks, if we think about the S&P 500, they're up 4%. But today we could get a real disappointment if Governor Michelle Bullock does not deliver that 0.25% cut, Andrew.
Yeah, and has that been reflected in markets at the moment, particularly when you take a look at the movement of the Aussie dollar?
Yeah, it's a great question. I 1,000% agree with you. So we're seeing currency traders really hedge their bets, I guess, betting that Governor Bullock won't cut interest rates. And it's interesting to see that's probably why the Aussie dollar has pushed up to a 2-month high. So traders are really cautious, getting ready for a big potential disappointment today. It's pretty, it could get ugly. That's the reality. And why am I saying that? Well, we've got to look at the futures markets. The swaps market are saying that the RBA, 90% almost probability that we could see a 0.25% cut today. But if we don't get that, you're going to see probably a sell-off in tech, real estate, and other growth sectors. We'll probably see the Aussie dollar push up even further and break, maybe potentially hitting a 3-month today. So that'll be a key focus for currency traders and also investors. But meanwhile, I would be expecting higher highs in some of the gold stocks that have been generating lots of alpha and outperformance this year.
Yeah, which ones in particular are you focused on there, Jess?
Well, there's many to have a look at. Interesting really to see Evolution Mining has been punching far above its weight. So too has Genesis Minerals. Even Newmont as well has also been delivering lots of punch. But I really think we need to remember that the gold price is only up 13% since the Fed cut interest rates last year, embarking on their first rate cut cycle since 2019. Thanks very much. But it's really worthwhile to note that the evidence is out that if history repeats itself, there's no reason why you wouldn't expect gold to run up 80%. Yes, I said that correct. Didn't stutter. 80. So that's if history repeats itself. We've got to remember the last 3 times the Fed has cut interest rates, gold has rallied to a brand new record all-time high, jumping up 100% on average. But this time for gold could be a little bit different, Andrew. We've got to remember that China just last week announced for the first time they're going to potentially unlock $60 billion in insurance assets for companies to buy gold. So this has never been seen before. So insurance companies will now be able to allocate 1% of their asset allocations away from bonds, moving them to gold. So this is probably why we're going to probably see a lot more higher highs for gold stocks this year that are indeed performing US tech stocks, such as Genesis, Evolution Mining, take your pick. You can almost have a look at every single gold stock on the ASX. It's generating a better return than US tech stocks and globally tech stocks as well.
Interesting. I mean, you mentioned China there too, Jess. Yesterday we saw Xi Jinping meet with some of the country's top tech leaders, including DeepSeek, Jack Ma from Alibaba. Interesting to see sort of throwing his support back behind those tech entrepreneurs.
Yeah, absolutely. It's a first that we've seen. I think the fact that President Xi will be focused on cutting red tape, pledging to cut fines and fees. It's really all about leveling up the playing field for Chinese tech stocks, and it's probably going to add even more hot sauce to their record rally. We've got to remember that Hong Kong's market is already outpacing the US this year. So the Hong Kong Hang Seng, it's up $5 trillion US dollars, or 19% since the launch of DeepSeek. So now we've got, I guess, extra firepower coming from the government side. It's really proving that Chinese tech stocks could be a force to be reckoned with. So just have a look at Tencent, Alibaba, and BYD. They're outpacing the Mag 7 stocks in the US as well. Alibaba, we've been speaking about that a lot with clients. Their shares are up 60% since the launch of DeepSeek. And I think that their earnings out later this week on Thursday could even propel their shares even higher. So the market is looking for record revenue of 200 and almost $80 billion in revenue. So that'll be a record, and it's partial thanks to Singles Day as well. But focus will also be on their AI model. But all in all, stepping back, taking a big picture before I get bamboozled in one stock, the focus really is you need to ask yourself, if you don't have exposure to US tech stocks, why not?
Now, Jess, of course, China, key for so many resource stocks here on the ASX, in particular the largest miners. Now, BHP, its results just dropping this morning. Looks as though it's a miss across the board there. In fact, its dividend down to an 8-year low.
Yeah, a big disappointment for long-term shareholders. Their shares have been in the gurgler, but nevertheless, BHP still remains one of the strongest and longest dividend payers throughout history. But beats were not seen across any lines. In fact, not only did their EPS miss, but we're seeing that their profit fell more than expected. So too did their net income. The dividend also a disappointment. But we do have to remember markets move in cycles. BHP is focused on copper. And we do know the copper price has broken out overnight. It is moving higher. So I wouldn't be expecting BHP's shares to stay down and out. Secondly, remember, Andrew, that China does go through a destocking period after coming back from Lunar New Year. And so part and parcel with seasonality, we typically see China increasing their buying of commodities towards the back end of March and into April. So perhaps this is reason what I'm basically alluding to is that you might be expecting dip buys into commodities start to come into the market in due course. I'm not saying now, I'm not saying over the next couple of weeks, but you might be expecting some serious heavy buying over the next couple of months in line with China increasing their buying of commodities. Yeah, absolute unfortunate disappointment today for BHP, but we'll get more details in due course once we really get a handle of their results, which have just been released to the market.